Thank you for joining today's webinar. The live geometric outlook happens every Mondays and Thursdays. So just to read you the risk warning. I would like to welcome the ones who are new or their first time today in this webinar. Now the risk warning here, very quickly, just to go over it, it'll only take less than a minute, I would say. Forex and CFDs are leveraged products and involve a high level of risk and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risks involved and take into account your level of experience. Seek independent advice if necessary. That's it. Okay, that's your risk warning for you guys traders out there. So today is the 13th of April. Okay, we're going through the market outlook, based on patterns as well today. So I'd like to welcome some new Testing, testing, testing. I think now you guys can hear me. Still no sound. Screen. All right. Can you confirm now? Yes. Okay. Good. Sorry about that. I'm not sure why. But okay. Let's carry on then. Sorry about that, guys. Yeah, because it does happen with the GoToWebinar, right? If I don't go on it for some time, it just resets the sound sort of system, and it picks up the other instruments. So okay. So you guys can hear me okay, so that's good. All right, that's the most important thing. So let's go to the majors first. Okay, a couple of things on the majors because I know quite a number of you guys are doing some trades on the majors. So we'll go into the Euro USD and then the USD JPY. I just want to give you a bit of a what do you call that, a preview, not a preview, but a view on previous trades like W-like pattern on the Euro USD at this moment. It has already sort of made that move, but it extended higher there. So at this moment of time, we are looking at the 1 hour chart here, and there's a bit of an uncertainty, but the bias is to the downside at this stage. So we are looking at the Euro USD on the 1 hour chart. As you can actually see, you've got more dominance on the 1 hour chart by the sellers, okay, even though you've got this big move here. Now when you see a big move like this, usually, I mean, from a patterns perspective, this could actually be sort of a flagpole pattern to the upside as well, but we need to be quite careful at this stage. But the eyes of investors or traders, especially the smaller traders, they are eyeing this part here, this huge candle here, okay, because what usually presented itself from before is this huge candle here. So the eyes would actually be looking at this. So there may be some interest to drive prices to the upside again. Okay, so here we need to go onto the 4 hour chart and look into what's going on here. Now for the medium term, 4 hour and above, it looks like there's just very strong resistance at this level here. Okay, so if we go on and look at that, so for the Euro USD on the 4 hour chart, we could safely say that we've got more dominance to the downside. Okay, so let's say from 4 hour onwards, let's look into the daily chart. That's again more dominant to the downside. So we then know from medium term to long term there may be more interest to the downside. So it's only logic for us to think that there may actually be more correction at the shorter terms. But we need to confirm that with what we see. So if we go on to the 5 minutes chart, for example, we look into still some selling interest there on the euro, okay, versus the dollar. As we go into the 15 minutes chart, that again, that story builds up, okay, with more downward type momentum pushing prices down. As you can actually see, the correction itself on the upside is really very small. Okay, so this is on the 15-minute chart, but let's go on to the 30 minutes. We need to also look at what goes on in between the swings. Okay, you've got higher, low, and whatever, but you can see that there are hardly any strong bullish candle, but it's dominated. This whole move has been dominated by bearish candles. So these bearish candles here, now it's testing the 200 moving average on the 30 minutes chart. So we're still looking at the bias to the downside as the pressure really builds up. But I'm not looking at a very clear, I'm not able to see any clear sort of ABCD pattern, especially because I don't see that peak area here, for example, that is challenged by any moving averages. If this peak here is actually hitting on or found resistant on any one of the EMAs, then I could then consider a nice ABCD to the downside. At this stage, it's a little bit too risky to look into the pattern or to even see this one as an ABCD to the upside. May be a little bit better than considering the downward type ABCD. So here we don't actually know just yet what exactly would happen, but the bias at this moment, looking at this one here, there may be a possibility of prices to actually move to the upside, okay, to find a bit of a correction to the upside. But again, when you look into the 4 hour chart, then you've got a nice sort of bias to the downside here. Okay, so it may be due to a correction or so. So if I go into the 1 hour chart again, let us just see whether we can sort of trade it looking at the Looking at price action itself, 1.0626, as you know, is very close to the 1.0620 area. So it is playing around still, really close to the psychological level. So if we take the Fibonacci, let's say, and look into this one here, and pull that one right up, and consider this a potential ABCD type pattern, then you can see that that move down there, it's really, you know, on the dot of the 61.8, which is a good sign to consider that it might actually bring more force to push prices upwards. So there may be a potential upward sort of move, but you can always draw your ABCD here. This is based on the 1 hour chart, and look into the potential of that move upwards. Now, when it does go upwards, then if you draw that pattern, it should then be clear that your trading area or your entry would only be after it's gone past the centroid area for this Euro USD on the 1 hour chart. Okay, so that centroid area that it has actually gone above the centroid area should also mean that it has gone above the 3 moving averages. So there, that is your safer zone or your lower risk and higher probability zone to consider an upside move for the Euro USD. Okay, so here itself you've got that move there, but again, it's a bit too early for you to participate. I would say it's riskier to participate now in any buy sort of move, only if you are willing to take that risk, of course. But at this stage, using the pattern itself here, it's giving you that centroid level at 0.650 on the dot. So 1.0660 would actually be an ideal area for you to consider it as a trading area. So if I do that at 1.0660 right there, okay, so that would then move prices a little bit higher here at 0.660 to be your ideal trading area or entry area to look into 1.0709. So you can still take that 0.709 if you want to, because it's close to, you know, it's before reaching the 20 area, but it's only wise for you to also look to the left, okay, and look at all this area here. There's a significant support area here as well. So that does marry very well, that if prices does go above all 3 moving averages and above the centroid area, you may find some buying opportunity for Euro USD on a 1 hour chart, but then you need to look at your take profit or your reversal zone. The reversal zone is quite key, because as you look left, you've got your support area there as well. So what you can then do is to use these support area as a guide to drawing your support and resistance zone. Okay, so I would just consider the lowest. Let's say I'm doing this excuse me, this based on this candle here, the lowest body plus the lowest area. Excuse me. So we've got all this area here as your zone. So now if we take a look at that, then it would then guide you, and you could see that this is where you could be considering trading or exiting before it reaches this zone here. But again, we want to sort of polish whatever price that we see at 0.700 to be closest to 1.0700. So you would need to then exit before 0.700. So I would then look into the price of 1.0690 instead. Okay, this is to be you know, a little bit cautious with a reversal zone. So 0.690 would actually be there. So this could be considered a, you know, sort of a small short-term trading area here, you know, with about how many pips would that be? About 30 pips or so. But this is to look into a higher probability type trading in this area for the Euro USD. Okay, so it all depends on your risk sort of appetite as well, whether you would like to take that further or would like to enter earlier. Okay, you would need to then look into that yourself and measure your risk. The risk for the, how do you call that, because it's a pre-trade, meaning that a pre-centroid, before the price has actually hit the centroid area, or before, you know, before the trade has kicked off, based on the centroid area, you can then use the 67%. The 67% as your as your stop loss level. Okay, so if you pull your A to B, okay, for example, then you are looking at the 67% down here. So that would be your stop loss level right there. Okay, 67% of your A to B. So I can change the color there to your red line just so that it's more obvious. So that's how I would be looking into trading. This one here is to risk that much stop loss based on this one here, and that much take profit as well. So this would then help you, would guide you to having your stop loss level there, your take profit there at 0.690. So if you are looking into number of pips, that's 42 pips on the stop loss, okay, and about only 30 pips or so on your take profit. So you can always adjust that at a later stage, whereby when it actually goes past here, you can then use your trailing stop to actually improve that, make that stop loss tighter as well. So it can actually then meet the risk to reward ratio of 1:1, and usually the risk reward ratio of 1:1, if that is a 30 pips, you can still take 30 pips as well as your stop loss level, or if not, you use a 67%, but then adjust as the trade goes better. You want to tighten your stop loss, your trading stop loss. Okay, so that's your Euro USD on the 1 hour chart. I guess you guys have got quite a number of questions on gold as well, so we want to look at the dollar's performance on yen. We do still have risk sort of events happening, so there will still be more interest in buying the yen, so you would probably see more appreciation on the yen, so more fall on the dollar. This is for dollar versus the yen, but as a whole, with dollar, I mean the dollar index as well is giving us some hint that you've got more room to the upside. Okay, so maybe not just yet, but perhaps quite soon, in between a couple of days to about a week time, you would see probably more drive to the upside for the dollar. Okay, but you would need to be very cautious and not think that dollar against all pair would be strong. It all depends on the mechanics and the personality of the pair as well. In this case, if you compare both safe havens, the dollar and the yen, then they've got more interest on the yen. So hence the reason you've got more yen appreciation compared to the dollar. Okay, so here if we go onto the 1 hour chart on the USD JPY, you can then see that the bias is to the downside for the dollar versus the yen. You've got more pressure to the downside with more candles, as you can see, dominating, bearish candles dominating the whole move. So USD JPY is looking as such under all three lines. You can see that the angle as well gets steeper and steeper for the USD JPY on the 4 hour chart. And again, prices or candles are majority under all three lines here. But you can always, as usual, I've always, remind you guys to always look to the left, and you want to zoom out and look to the left and look at any significant sort of support as well. Now, if we zoom in a little bit here, you could see that where prices is at now, let's say based on the 4 hour chart, you could see that you've got some buying sort of zone at that area there. You can always use that lower candle there, okay, lower body, and then the lowest wick there, just to give you a little bit of a zone, a potential zone that would find a strong support, because as you can see, there's a lot of support that has actually taken over. Now we're looking at it based on the 4 hour chart, but we want to then see it this way, and you can then see price action itself is telling you that there is a possibility for prices to find support at this level. So the USD JPY, this is what it's going on. But again, if at all it's finding support on the 4 hour chart and heading towards the upside, you've got the risk of these three lines made by the EMAs, the exponential moving averages of 50, of 100, and 200 here as well, to find maybe a resistance in any one line. So there may be some movement here, but that was a very significant sort of move. Okay, if we go on to the daily chart, and I'll show you, if you look at there, you've got that big move that has actually gone up, and if you go to the 4 hour chart, then you can see that it's quite clear that you've got some support there. That was where we actually laid out that support resistance zone. So you want to look out for that area as well, because you've got that candle there that I've lined it up, and now you've got the two lines at 10877 and 10851. Now both lines where we have actually drawn that very significant support is very close to both 80 and 50 psychological levels. So that does actually mean a lot, meaning that there may be a drive up push to the upside, and this is what's going on now. We are on the 4-hour chart, and you see that power of that candle. That candle is showing, if it is showing you you know, a very strong sort of push in the higher time frame, then that is actually a very big push on the lower time frame, of course. Okay, so that is a significant sort of impact to the market, telling you that there are a lot of buying sort of opportunity that is going on at the moment for the USD JPY. Now here, if we look into a pattern that could easily be like a Z-like pattern, that does actually confirm that there may be room. Okay, so here, for example, if I draw the head part of the Z-like pattern and I move that one there, that gives me a possibility that the dollar might rise up to the 110.15 area. Okay, but of course we've got several rules we need to use, to apply based on Fibonacci as well. Here I'm just doing a visual kind of pattern, which is called the bearish Z-like pattern, which means that I've got an A, B, C, D. We are predicting, looking at C to D. C to D could equal the length of A to B, but usually the price, once it reaches the D, would actually start to depreciate or reverse. Okay, but that level there is usually a second option on knowing where it would reach would be at 50% of the B2C length. So the B2C length, let's say, if you pull your B2C, you can see that the 50%, it's on the dot of that AB equals CD. So there may be a high probability of prices reaching 11015, but I wouldn't say that it would reach as a straight line just up, maybe zigzagging, but then once it zigzag and goes up there, it may be a possibility to go upwards. And usually in the C to D move, it would move in an ABCD sort of format, you know, like this. Okay, so you've got your A here, B here, C here, D. So don't be surprised if it goes up and then it corrects at a certain level and then shoot up again. So usually the C to D move, it's in the shape of an ABCD pattern. Okay, so that does actually depend on how much correction it will have to bounce it up again to that level. Okay, so this is basically it. You can always do, once it goes up and correct itself, you can then treat it as an ABCD again, and that ABCD would then complete this Z-like pattern as well. Okay, so a Z-like pattern like this is a bearish type pattern, because once it reaches that level, it's expected to come down. Okay, so that's your A, B, C, and your D's up there. So once it reaches the D and then coming down, you're trading the D to E. So you could trade both the C to D leg to the upside and the D to E leg to the downside. Okay, for the USD JPY on the 4-hour chart. So hope that is clear for you guys. Any of you guys are trading the USD JPY at the moment on a buy, or perhaps you're looking into the lower time frame perhaps, but just be aware that these are the risks at this moment of time, looking to the upside. I know it's been giving you guys lots of downward type pressure, but it may actually still be to the downside type trend, but it may actually be signaling some rebound or reversal type move at this moment of time, okay, before it comes down even more. But at this stage, it may be looking into the upside and find resistance at this area. So it might find resistance at this area not only because of what we have drawn, AB equals CD, or even the 50%, but also because it's quite close to the 50 moving average, exponential moving average as well here, okay, for the USD JPY. So that's your trading opportunity to the upside most probably, but watch out for the correction. Like I've said, you can always go on to the lower time frame and look into this move here, let's say on a 30 minutes chart. If at all that is a possibility to go to the upside, you have an ABCD here, but I wouldn't call it a nice ABCD because C has just not found support in either one of the 3 moving average. It might still work though, Okay, so if you pull your A to B right there and you do that, you can see that it's got some potential right there, which is very close to the 200 moving average as well. Okay, so here is one, and if we go on to very short time frame, you can see that you've got a clearer ABCD here as well, which may already move. You've got one more here, A, B, and then you've got C, and then you've got D there, right up there as well. This is on the 5-minute chart. So for those who like to trade on a shorter time frame, you can always find patterns within a pattern. So you've got a big pattern. Let's say we have found the Z-like pattern on the 4-hour chart, and it's giving us a trade idea of considering an upward move. So then we go on to lower time frame and look into whether we've got other patterns that might confirm that upward move. So like this one here, we can see that that's exactly on the dot. So we had an opportunity earlier on to trade this ABCD as well to the upside. That was a very nice ABCD in a way, because the C has just found support right on the dot of the 200 moving average, as you can see here. So that increases the probability and lowering your risk as well to consider that trade. So you could have easily earlier on, let's say, the reason why I would be looking at the buy type ABCD or bullish ABCD is because it's due to that big Z-like pattern in the 4-hour chart. So that gave me a hint that there are more possibility to the upside. So if it's possibility to the upside, whichever time frame I am looking at, especially the shorter ones, I want to look at ABCD to the upside. Okay, you want to match the pattern with the trend. Okay, so that gives us a nice opportunity right there. You see, it's on the dot. You see. That one there. So AB equals CD right on the dot right there. You could have actually entered, for a very short sort of trade right there as well. Okay, adjust that one there, and then you've got an area. This is just to demonstrate and show you how you could be still trading on the short term, no matter how short you would like to trade there, as long as you see the pattern. But the pattern needs to mirror the trend. Okay, so here you've got you see the higher the probability of it reaching to the dot of AB equals CD as well. Okay, because the C has hit very nicely onto the exponential moving average, like almost on the dot, and that also depends on the candle type. That was a rejection type candle. Maybe it's got a long sort of wick, and that wick touches with a very small body, just finding no room or no body to go downwards, but to go upwards. So that has been reflected by the candle itself. Okay, so you see that reversal coming down again there. Okay. This was quite a nice trade in the 5-minute chart. If you go into the 15 minutes chart, you can see that you've got that rejection candle to go upwards as well. Mainly because not really a rejection candle. That candle is still happening at this moment of time, but you've got a body that is weakening on the bulls. Okay, so the bulls body is weakening, meaning that they're a bit exhausted to go up much more because it's left with a skeleton right there. But you need to wait till the next candle comes up and then give you that idea whether or not it will then reverse. Always look to the left as well and notice any sort of movement that could then trigger a reversal as well. So you want to always look into the left. So you've got some opportunity there to the upside right there. If you're looking at the 4-hour chart, then as you can see, you've got loads and loads of support area right there. Will the resistance there, would the previous support become resistant? It all depends on how much it would actually take that and start to reverse. But there's a big possibility of that. You've got some resistance right there, but you can always go back and look at whether or not you could find a previous fall of prices as well to mirror. Okay, because usually prices now, it could actually mirror big moves, previous big moves as well. So you've got some big significant fall of prices here previously, so that may be a reason to consider that area as a potential reversal zone of prices after going up, coming down. Okay, so here if we go on to more to the left, just want to see whether or not we've got any fall of prices that would mirror the price now or current prices. Okay, I'm going quite far back there. Let's just go to the daily chart. Don't see something happening here basically. So Yes, there are possibilities, but that's basically what it looked like at this moment of time in terms of pattern there, a possibility of prices going above that zone and then heading upwards and then reversing at that area there. So the reversal would be looking at the 110.15 or 110.00 area as well. Okay, it's probably not much room right there, or significantly it's got some room there, sorry. So you could actually look into that potential. But you want to look into lower time frames, but look into whether you could find some bullish pattern, and then you could then enter your trade accordingly to the smaller patterns, bullish pattern, to aim at the upside here. So that is also called trading in stages. Okay, it's when you trade smaller patterns within a big pattern. Okay, but the same sort of direction. You're aiming at the same type of direction in terms of trend. Okay, so let's look into let's look at GBP USD as well. I know some of you guys are looking into GBP USD too. Now here we have got excuse me, I've not recovered fully with my cough and flu, so bear with me if I'm coughing quite a bit. So if you see this one here, GBP USD 1 hour chart, we've got some sort of bullish type movement, 1 hour chart. We're looking at that bullish type momentum picking up with the movement of the 3 moving averages as well. You can see that they are actually sort of heading upwards too, and that is a sort of hint that may, you know, give you some buying opportunity, but not for the long term at this stage, because you've got a bit of uncertainty. You've got in the daily chart itself maybe some room up, but not too big a room, okay, because you can find resistance there at that area as well. So this is a bit of a challenge. So if we go onto the 4 hour chart, it's just that we want to take trades that are more sort of not conservative, but risk averse. We want to measure the risk quite well, okay, with this. So here, for example, you have got some upward type pressure to the upside here, and then it pushed price upwards above all 3 lines. So here itself, if it's on the 4 hour chart, you've got that movement, but when you look left, you can see that you've got all this level that it has actually turned around to mirror areas that it previously has actually fallen, you see. So you've got so many, I mean, quite a number of resistance all over this place here. So you've got, it's packed with resistance, and hence the reason it's got more resistance at this moment of time. So what you would like to then look into is perhaps a possibility of a bit of a distant fall, a bit of a fall until that area there. So because if I look left again, there's just not too much strong sort of support anyway close to that area. You see, you've got some support, but not significant support. You've got more resistant type move at this price now. Now the GBP USD is trading at 1.2529. Okay, so 2520 basically is your psychological level. So you want to mark that one there as well. I'm just seeing more resistance and lack of support, meaning lack of a support type move at this price. Okay, it's more falling of prices. So let's look at trend again, and let's look into the long term. We just see uncertainty, as I've mentioned, on the daily chart. On the weekly and monthly, we just see loads and loads of move to the downside. I would say that it's quite a steep movement to the downside. So for the long term, there may be more selling pressure. Okay, but we want to be clear with what we can see on the shorter term as well. We do find some potential. 5-minute chart, let's say very short term, you do have an ABCD right here. As you pull this one here with the candle all the way down, you see that your C has got has hit the 50%. It's right on the dot of the moving averages as well, so that may bring some opportunity to the downside, an ABCD type move. Always check first, not draw the pattern, but look into the other time frame and see whether that clarity becomes there is clarity or not. You know, it has to be clearer, the picture of trend, and things has to be clearer. Like here, for example, if I go into the 5-minute chart and say that I want to draw that ABCD, but then when I go into the 15 minutes chart, it sort of gone inside a tree line, so that is already uncertainty. So I don't have that match of 5 minutes, 15 minutes and 30 minutes anymore, because I've got my 15 minutes not really matching. And if at all I look into the 5 minutes and then I see that, okay, I've got an A, B, C, D, really nice one that I could consider, but then when I go on to the 15 minutes, prices are, or candles are inside all three lines, then I can still trade that if I want, but I need to be prepared to take the risk, because if 15 minutes matches with 5 minutes, 30 minutes as well, then I've got a better chance, meaning my probability would be higher, but my risk would be low. But at this stage, because of the 15 minutes chart doing this, it then increases my risk, but then lowers my probability. So me personally, I wouldn't be looking at that trade even on the 5-minute chart and go into a ABCD pattern as yet, because it's just too risky. Okay, because as you can see, even now you see how the bounce up of prices as well, like this. Okay, so you don't want to be caught up in that kind of an ABCD potential whereby it doesn't match, but only one time frame is giving you that clarity, but then the rest is not really. So it's probably best for you to look at other pairs. And the thing about 30 minutes as well, it's just entering that area of uncertainty as well. So it's not giving that clear upward move or downward move, finding resistance or support at any one of the moving averages. So that's not really a good one for me. So if I ignore the 5, 15, 30, then for GBP USD, I'm looking at a 1 hour, the 4 hour and the daily. It's just giving me a bit more clarity to the upside based on the 1 hour chart itself. But no clear sort of pattern per se. I mean, when I say I don't see clear pattern, I also mean that the C point, you know, is where I look at usually in terms of clarity of pattern. Whether or not the A, B, C, D, the C hits either one of the moving averages as well is really important for me. Okay, because it increases your probability and lowers your risk. So here, for example, what I can then see at a glance for the GBP USD is a potential, how do you call that, a potential Z-like pattern. Okay, I'll draw it for you first so that you can then see what I mean. There is the B2C leg right there. Okay, there may be a potential like this. Okay, but we need to evaluate that line much more, and one like that. But the problem is that that length is a bit too long, and that may be a very big length as well. So what I'll do next is I'll measure the 50%, just say that I consider this as a Z-like pattern, but if it does actually fall or ends here, it should actually fall at the 50%, which is here. Okay, so if I draw a line from there all the way down to, I'm just measuring the tail now basically, okay, of the ABCD. So I would like to mirror and guide that, you know, and see where I could consider my A. So here would be my A area right there. Okay, so let's say if I draw A to B right there, which is quite close, okay, then I could consider a fall at this stage right there. But it's not a high sort of probability of an ABCD pattern following a Z-like pattern. Of course, you've got ABCD and a Z-like pattern as well, because your A is here, B, C, D. So AB equals CD, still the same sort of principle. But Fibonacci is not giving me that kind of assurance that it's quite a nice one, because if I pull that small move there, I get too far, 400 plus Fibonacci extension, which is not supposed to be the extension. It should be the maximum of 261.8. So it's not looking like a very high sort of probability, but looking into a potential. There may be still potential for it to come downwards and find the support at this area here. But because it's not too clear, I wouldn't actually be looking at this as a Z-like pattern. I would look at this as a low probability Z-like pattern, because when I pull the Fibonacci and everything, it doesn't really give me that assurance or that much of a probability, okay, especially because of this move down here is just not clear. We've got criteria for the advanced patterns as well that you guys will have more of all these materials in the fxgeometry.com, because I will be having videos covering each type pattern and what are the criteria that make it a high probability pattern or not. So you've got a list of all these steps or criteria using Fibonacci. So I've taken that step earlier, and I found that this visually may be looking like a Z-like pattern like that, but not really good enough on the Fibonacci. But it doesn't mean that it won't actually happen. It may even happen, but it's just that as a trader you would need to decide whether you would want to take a trade based on high probability, low risk, or you are willing to take a risk at various levels. Okay, so if you are willing to take that risk, and this is basically your choice and your sort of personal rights to actually trade that way. But you need to be very careful with the amount of risk that you would like to take as well, because if you are opening many trades or you are trading correlations, then you might be multiplying your trade, your risk or your losses as well. Okay, so be very careful. Like for me, I prefer to choose one high probability one with a bigger lot size, let's say, but then it needs to match most of the criteria of trend, of the Fibonacci as well, and various others. So that's your GBP USD 1 hour. I just couldn't give you a clearer sort of picture because I don't actually get that clear picture from the market at this stage from a patterns perspective. Okay, so not yet at this stage for GBP USD, perhaps too early to plan for anything for myself as well. So here you've got a bit of a small ABCD here, like I've mentioned, but again, didn't match up so nicely in the other ones. It is a matter of whether you want to take this trade or not, and you don't mind that the risk is a little higher, and that's entirely up to you. Okay, so let's go on to the USD CAD. Okay, so USD CAD, I know some of you guys have benefited quite well on the ABCD posted by Arif as well on the GTI. I think it was the USD CAD, if I'm not mistaken. That was day before yesterday or yesterday, that it has actually hit its target. It was quite nice. So if I pull this one here, you have got a minimum of 38.2 right there. I think this was it. This was a successful ABCD pattern, correct, on the GTI group as well. So that one there, for those of you guys who are wondering how did we do that, it's just AB equals CD right there. So then we took profit before it reaches that area there, and do the centroid as well, and mirror that move. Okay, that's quite a nice C actually in some way or another, because the C was a minimum of 38.2, which is still okay. All right, as long as it's a minimum of 38.2, meaning once you pull your A to B, your minimum should be 38.2. If it's at 23.6 or under 38.2, it's probably lowering your probability and increasing your risk. Okay, so we want to always think about the risk factor so that your take profit side of things could be taken care of, much better if you focus on the risk side of things. Okay, so if you go on to 4-hour chart, we still have got that downward tight pressure, but I don't see that C point in any time frame at this stage giving me a nice, I think except for the 5 minutes chart. Let's see this one here. Got something there, but not really a very clear sort of pattern that I can see. So you've got something right at the top here, A to B, and then C there, and then downwards as well. As you go on to that, just got to find, you'll find more resistance as you can see on USD CAD at the moment, even on lower time frame, more pressure to the downside, but no clear sort of pattern for me, or not as clear as I want it to be. Okay, because if you measure it based on various criteria, you can then choose a pattern that has higher probability. Okay, it's better to pick higher probability one than to, just go for a 50-50 type probability, and then you'll multiply your risk as well at the end, because you'll find there are too many patterns, but not all patterns will be offering you a high probability. Okay, so USD CAD 4-hour chart, most of the charts are favoring a downward type bias. for the USD CAD. Okay, but no clear sort of pattern that I can actually see. Euro JPY, as we go on to Euro JPY, let's see, I think we'll start, okay, we're on to Euro JPY and then the AUD USD and then gold, okay? So we'll be able to make some sort of conclusion of the market's positioning at this moment of time. Now here, for example, you have got some clear C points, okay? You've got A, B, B, and then C up there, yeah? So that's your lower, so A, B, C. So your B to C corrected there, and then you're looking at the downward sort of move. So if you look into that one there, all the way down here, double click that, so you can see that that's an area where prices are at this stage as well. Okay, so as we remove that, you've got another potential of A here, B here, C. Okay, and then downward move. Okay, but then for the Euro GBP, if you go into the 4-hour chart, you could see from a bigger perspective, it is still having that nice downward type pressure look, meaning that the slope is quite to the downside on a 5 o'clock type angle. It's found a lot of resistance at the 3 moving averages, which is a very good sign. If you look into price action itself, it is trading at 0.8484. So 84 last 2 digits at the end of the 4 decimal places is too close to the 80 type site number. So you would need to wait till prices go under 80, let's say 0.8470 or so, to give you that better sort of move to the downside or bias to the downside. Okay, so here itself there may be a bit of a potential here to the downside. I like using the 4-hour chart as well sometimes because for crosses especially, or even exotics, Euro GBP, Euro JPY, those that does not actually involve the dollar, you will find that you have what you call that, you've got a good possibility of looking at prices reaching its target depending on the ratio as well. Okay, so those ones that are not combining the dollar in it, like Euro GBP or Euro JPY, they sort of like the C point to land at the 50% for some reason. Okay, so here, for example, if I do that, you can see that it's 38.2, right? But most of the time, you will see more than 60-70+% of the time, if you've got a nice strong trade down, let's say on ABCD going down, for these exotics or crosses that does not involve the dollar, they like the 50% as your C point, and usually if it does, then it gives you a high probability to go downwards as well. So especially Euro GBP, Euro JPY. In this case, this one here, it favored the 38.2, but it's got that area that it favored it, which is quite nice. You know, found resistance at the 50 moving average. Okay, it's not too bad. But if this C point actually touch the 50% and then it sort of touch one of these 3 lines very accurately, then you've got a very high probability of the D point to be reached, and usually it's AB equals CD that happens most of the time. Okay, so if I pull this one all the way down here, I like taking that one there, let's say, or this one here, doesn't matter, it's really close to that 38.2 or that 50 moving average, then you know that you may have a potential to the downside for the Euro GBP, aiming it at this level here. Okay, aiming it at the 83 area, but you, even though it's 83.42, you want to aim at the 83.50 area because of the psychological level. Excuse me for that. Okay, there you go. So you've got that move, but the thing about this sort of move, the Euro GBP, is due to its many points. I mean, many points, many resistance is good, but if it moves like this, like more than 2 points, it will delay your movement. Okay, but it's a matter of waiting. It's a waiting type of game as well, when you have got prices moving actually sideways and creating all these points. Okay, so hence the reason you see it not really coming down at an angle like that. Usually it depends on the angle of how it is trading. That's the speed as well of how much it will fall or rise. Okay, so that angle and this angle is like 4 o'clock. So that's why it's actually slow for you to see your outcome of it reaching the D point. Okay, so it may be a little bit slow, but you want to always look at what is making that slowness, or what could actually prevent it much more from moving down fast. Is always to look to the left. When you look to the left, you can see that that is where the point B was as well, where it found support. Now, could you see more support? Yes, and more support as well at this level. And you've got bigger support at this level, and hence the reason it's just thinking, whether to mirror that move, and gathering its power. So you've got a very significant move of Euro GBP here, and that was back in 2016, last year in September. Okay, so that was where that move was, and that could be considered quite a significant move. Okay, 600 plus pips upwards after that, what do you call that, support area. So you want to pay attention to these support area, because that was where it has found. So maybe, just maybe, what could happen is because of that angle coming downwards is not strong enough, it might find support, find resistance again, and then back down again. Okay, so hence the reason you might find it a little slow, happening on this one here. Okay, so that's for the Euro GBP. I don't really see at this stage, perhaps in the morning would be much clearer, but here you've got sort of a nice C, but not as nice as if it hit directly on the dot of either one of the what do you call that, moving averages. Okay, and as we move along, again, it's just not giving me that clear sort of clarity in terms of trend, in terms of patterns as well for the Euro GBP. What about the AUD USD? That's another major there. This one here could potentially be a very nice trade, mainly due to the way it found resistance right there at the 200 moving average. So there may be a potential of a downside or an ABCD. But what we need to do though is, firstly, I'll clear all these ones here, all the lines and objects, so we can see it from a clearer perspective of trend first. Okay, so as you can see, it's got a bit of an appreciative type move there, looking into the upside. Okay, on the 1 hour chart. As we go on to the 4 hour, that's where it got stuck and found resistance instead. So the upward type momentum is weakening, I would say, and it's got that medium term, it's just finding resistance. Okay, maybe a potential. As I pull the Fibonacci, it looks quite nice, but I would prefer for more candles to come downwards. So as it come down more, I think it would give us a better possibility to consider. Now that didn't really hit the 61.8 right there, but you can always look into that candle there, which does. So you can still consider that as a potential or high probability type C. If it does reverse further, it would actually be better. Okay, so what's happening on the daily chart then? Again, uncertainty. So here itself is already giving me, 3 different scenarios on 3 different time frames, like the 1 hour, 4 hour, and daily. So in me being a conservative type trader, I would ignore all these 3 for now, because it's just not giving me that clarity that I want. It's not matching in all 3 time frames. Okay, so I would prefer to look into the 5-minute chart, see whether or not I could see a better picture in terms of trend. I see that corrective move on sellers pushing or pulling down prices is quite significant. It's quite powerful with a strong type candle. So there may be a selling sort of interest or pressure happening at this moment of time. You can see that just started to happen. 15 minutes chart, 30 minutes chart. As we go on to, you can see that is again happening there. So what we can then do is quickly go on to the either 1 hour or the 4 hour and start looking at why could that be a significant resistance. So we need to go and explore and look at, this is the reason why. You've got some resistance right there. Okay, as we go on, I just want to look at whether we can find more resistant power at this level here. Maybe we could find a very strong type resistance or not. That's important for us to notice if at all there is. Now you've got some selling pressure here, okay? That actually led to quite a significant fall right there, okay? So I can use this area here to mark this area here, okay? All this group of candles, highest body as well as highest wick, okay? So I've got a zone mark, but I'm looking for more possibility of a downward type fall, so I can use this that area to mark my resistant zone, okay? So here you've got some more movement to the downside. We're looking into the 4-hour chart right there. If I use this candle here and I mark this part here, then I've got all these 4 lines to actually mark all the areas that might be areas to look out for, okay? Because you've got some support right there, you've got some fall right there, but not really at this stage a very significant big fall from the peak, okay? You've got some fall right here, like really a big fall all the way downwards, but there's no peak that I can actually find that support resistance zone. Okay, so you've got some support here, very significant support area here. So you have combination of longish candles piercing through, and then you've got some support, you've got some resistance. Okay, you can then look at that level as your area to look out for. So let's go back now to this one here. So you see how prices can actually track the confusion area marked by all these 4 lines, and these are the 4-hour chart. So it's not very clear. You need to go above all these and above all these 4 red lines or under all 4 red lines to then give you a clearer sense of direction. Okay, so this stage not really a good one to consider just for now, because we need more follow through, we need more candles to give you that possibility. Let's say it reverses and just find itself coming under this 7550 area and below, then you've got a follow through. That means you've got reasons to sort of consider that the downtrend is picking up. Only then you could see an ABCD type pattern. But again, even I find an ABCD here, when I want to match my daily chart or the other ones, is just not giving me that, giving me confusion there. So not only that you want to confirm trend in all 3 time frames, it's also good to increase your probability, reduce your risk if you want to confirm the trend, and the clarity of the trend need to be in all 3 time frames. Okay, so if the clarity of the trend, let's say the candles are not under or above all 3 E&A lines, and you just see that you've got a nice ABCD at 1 time frame, this is actually quite risky sometimes, okay, because it could not happen. You've got a 50-50 type chance in that kind of scenario when you see a very nice clear pattern in the one of the time frame, but the other 2 time frames does not really match in terms of trend, or the candles are in between 3 lines. Then you are lowering your risk, or you're giving yourself a 50-50 chance that it could happen. So if that is the case scenario, you just need to accept the risk that you are willing to take. So if you are willing to take that risk, you accept it, then you go ahead for that trade. If not wanting to add on to your losses for the day, let's say, and you would like to only take high probability one, then you should leave that 50-50 type trade alone, so that you can concentrate, focus on higher probability type trades. Okay, so that's the tip I have for you, using AUD USD as an example. So as we go on to the we've covered that AUD USD a little bit. Let's just see what's going on with gold, and I would like to start fresh with gold. Let's just see whether I've got something drawn previously. We've got a couple of ABCDs going up, but let's just clear off everything that we can see. So we start fresh on this one. Okay, so here at a glance on 4-hour chart itself, I see loads of support. Okay, so hence the reason you're finding lots of more support, more bullish candles as well. And that support here is 3 points are on the on the moving average itself, and it chosen the 100 moving average to actually do that, and it's quite a good sign. Of course, the heavier your moving average and the more it finds support resistance at that particular one, let's say the 200 or 100, the higher the moving averages that it finds support and many support or resistance, then the higher the probability of prices going to that direction. Like here, you've got high probability of prices going to the direction to the upside, mainly because you've got lots of push, boosted up push from the EMA lines. Okay, so that's a good sign. So let's look into the 1 hour chart first. Let's just take it a little slower, looking into the angle as well as whether the number of candles or the majority of candles as of now are above or under the lines. Now, as you can see, they're above, and then you've got all the three lines. The moving averages are also signaling an upward type movement. Look at how they are separated between them, giving you signs of strength to the upside for the gold. Okay, this is based on the 1 hour chart. As we move on to the 4 hour chart, you can see that it's got support 3 times as what we have seen on the 1 hour chart, and we can see that it's got room to the upside. Now, based on the 4 hour chart, we have previously drawn an ABCD started from here, okay, and that gave us a possibility of it reaching at this angle here, okay. So that mirroring that there, and we've got higher moves right up there. So this may be a possibility as investors are looking at risk events. They are also looking at safe havens. Gold is one of them, of course, popular. So this may be driving prices. But looking at candles itself, the way the candles are behaving, it's just giving a lot more bias or room to the upside, giving us hints that this is what it wants to do in the market. Okay, this is what it favors in doing. So this one here, if I follow just this simple pattern of ABCD, and we evaluate this ABCD first, okay, before we go further. This is the same sort of ABCD that was drawn in the past, and prices since then has appreciated quite a lot. So as you can see, it's now at the 1287. So the room to go upwards for gold is as high as the 1335 area or 1336 area. Okay, so that if you look at the risk of that reversing as well, is quite, I would say the probability is higher for a reversal there, because if you mirror that to the left, that is where prices have actually fallen as well. Okay, so what we will then do is to look at this as an ABCD first before we combine that to become a W-like pattern. Okay, so I just want to show you again how the W-like pattern, the forecast that we did before, it still stands, it's still very strong to find that there is a possibility of prices to move up to the 1335. Okay, it's quite a significant move, which is very nice, but we want to also measure risk at this moment. Okay, you want to take small steps to buy, and to buy in stages perhaps, but you want to look at where your risk lies. So here, for example, A, B, C, D, when I pull my A to B, I find the 50%. So this is my C, 50%. Okay, so 50% usually would give me a forecast of about 200% extension. So I pull my B to C and I look for my 200%. As you can see, it's quite on the dot of AB equals CD as well. Okay, so that gives me a probability that, oh, there's a potential for prices to reach that area there. Okay, so as we go on, firstly, let's measure the risk of prices turning around now or turning around soon. So what we need to do is to look at the left to find any zones that we can find as a resistance zone first. Okay, so as we go back, okay, as you can see, it's just thinking of an area that has fallen as well. So in the past, prices has fallen from this area here. So I would like to use this area here as a guide for my support resistant type zone. So I would then use the price now, as you know, it's on the dot right there, okay, and I want to use that body area as well as the wick area right up there. Okay, so this would be my resistance area. So what does this tell me is that I need to wait till prices go above the 1292 to give me a little bit more hope that from there on it would then jump upwards much more. At this stage it might find resistance at that area, we don't know yet. It might just get trapped and find itself to go in between the lines and go sideways, we don't know that yet either. So there may be more probability to the upside once it crosses through this zone here between 1287 and 1292. Okay, so if it does, then especially if it does with a longish candle, then you've got much more possibility of prices going above. So yes, you've got that bias to the upside, but now we're just talking about risk. We're paying attention to the risk, so you understand what to expect. So you might expect a little bit of a correction first, a bit or not, I'm not sure, but you might find a correction that comes downwards close to the moving average and then find itself bounce off. Or you might find suddenly something may trigger and it will have a longish type candle to pierce through this zone to go upwards, come back down, find support here and up again. So that may be another possibility. So here on a bigger perspective, you've got that zone to look out for, okay, and then you see prices going upwards. Now as a pattern like this drawn A, B, C, D, if I attach from the very top that I can see with my eyes, corner left of my eye, I can see that this is the peak that's very obvious. On the high side, I pull it downwards, okay. I look at this area, I look at certain areas. It's not really very clear for me. I will just tell you what I mean first. I would like to look at the biggest move up there and drag it down, and then now I'll be looking at it as a W-like pattern. Okay, so the W-like pattern here means that at D area, now if that is my X, this is my A, B, C, D. At the D area, I would then find the possibility of a reversal to come downwards. So the A, B, C, D mark that area as well as your take profit area, but as a W-like pattern, you could then reconfirm and make that area as your reversal area. Okay, so yes, there's some room perhaps, but then let's wait until it goes above the 1292 area to find some room to the upside. Now, as I would like to find where my X point would be better off is always to pull the Fibonacci all the way down and look at this point B area. It's just hanging in between. So I like to have a structure that is easy to understand. So if I pull it to this area here, you could see that it's on the dot of 61.8. So what I will then do is consider this area instead as my X. Okay, so my X is now there, not there, because if I pull my X from here to here, my B is quite nice on the 61.8. So I prefer that to be my X. This is my A, B, C, D. So now if I pull my X now from here all the way down, I want to look for my 61.8, okay, here, and my 78.6. So I don't need my 61.8 anymore because it went past 61.8, but the prices are heading towards 78.6. So you would need to then mark the 78.6. Okay, so this is by pulling X to A. Then what you do next is pull X to C as well. And again, you do similar thing. You look for 61.8, which is again hasn't reached, so you can consider 61.8. It's already marked there. Now your 78.6 now becomes up here. Okay, right there. Okay, so then I take away all these. So now from a bigger perspective, based on the 4-hour chart, I have all these 4 lines or 5 lines or so that, let's take this one away. Because that's where prices are at now, to be my potential reversal area. So I need to watch out for these areas, okay? So I need one to go above. So we have drawn a zone earlier on, as I've said, you need to go above 1292, okay, right here, to be able to give you that more room to the upside. But again, that's the area where, you know, any one of these lines would actually, you would probably see it reversing there. So that's your reversal type zone. This is because we are doing it on the 4-hour chart, so you know you've got some room in between the lines anyway. Okay, but as we see this a potential ABCD type pattern, if you zoom in, okay, you could also look into the potential of an ABC area to the upside. Okay, As long as your minimum would be your how you call that, your 38.2 area, then you should actually be all right to consider that. At this stage, not really looking that clear to me. I would then prefer to look into perhaps this one here all the way down, and then you've got your C here. Okay, that one's already happened, so it did reach that area right there. Let's look into lower time frame and see whether or not we could mirror that direction, meaning to find an ABCD to the upside as well. Here, for example, you did find some support at this stage here, but I'm not a fan of looking at C point having this kind of landing, not really on the dot of the moving averages. So the closer it is to moving average, the better. So this one here may be considered maybe CD there. It's looking like it's finding support. Okay, and as we go into the 30 minutes chart, it's finding more support here and it's on the way up. This one here may be a nice potential for you as well to consider an A and B. Okay, this is your C area right there and all the way up. As we go on like that, it's not a good one because it's a minimum of 38.2 that your C needs to be at, so still not very good. As you can see, I wouldn't take this one here because as I pull my A, whether it's here or here, I just want to know whether the C would actually reach to 38.2, and it didn't, so I wouldn't see that as a potential at this stage. So no, not really very clear at this stage on a nice ABCD type pattern for the goal, but on a bigger perspective, as we have drawn earlier on, you are looking at a potential still to the upside. Okay, on the daily chart as well as the, I think it was the 1 hour chart, it's signaling very strong potential to the upside based on trend as well. So that move C to D of a W-like pattern or an ABCD type pattern, it's also signaling the potential to the upside. All you would need to do is to look at how you draw or plot out some very important or significant support resistance zone. Okay, so this is where the prices has actually fallen from as well, so you've got a likelihood of finding resistance at this area, so hence the reason probably best for you to wait until 1292 and above, okay, to then look into more potential to the upside. Okay, at this stage perhaps it might just find you know, some correction due to any fundamentals or anything else that happens to the dollar. Okay, all right, so yeah, this is basically it. We've gone through a few pairs, majors especially, a bit of gold right there. Not so much, I think you guys would be riding the trends and the patterns that was already published since in the morning or even yesterday. Today we do have some, but I think it's awaiting some more movement, hence the reason you don't find very clear sort of C point, you know, and things like that. But perhaps you guys want to share with me what sort of pairs you guys been looking at. I'm looking at AUD/JPY now. We've got ABCD that have actually happened, so reversing, you know, very nicely as well at the level of AB equals CD, as you can see. And I would guess that this would mirror with the C point as well. So C point was at 50%, so the D would actually be the 200% by putting B to C. So B to C, 200%. So yeah, it's really close. It's right on the dot actually. So you've got that area there as well as the potential. So I could have marked that one right there. So that was a nice on the dot type move, reverse right on the dot. That's for the AUD/JPY. Very nice trade. For those of you guys who have taken that trade from C to D based on the 4-hour chart, very significant, nice pips that you guys would have earned, because and also exited at the right time, meaning before the psychological level as well, before 82, before 82.20, I would say, and before that, then you would actually be having a very nice pocketed, very nice pips on this one here. AUD/JPY. That was a very on the dot type move. Very nice also because of how the C actually landed, you know, very nicely, finding resistance at that moving average there. And then we've got the trend as well on the AUD as opposed to the JPY to actually be on the downside. So lots of interest on the JPY as safe haven. So that sort of motivated the move to the downside for the AUD JPY. Okay. USD CHF, maybe GBP AUD. We are not. I don't think I've spotted anything interesting on the AUD GBP AUD in terms of trend, or in terms of trend. It's a bit blurrish at this moment of time on there. We've got lots of in-betweens, meaning the candles are in between all three lines as well, not very strong. It's just still thinking a bit of a sideways type move to in various time frames. So, okay. Not really a nice one here. So any questions, guys? Anything that any pairs that you guys are looking at, perhaps we could then look into, or any questions about what we have just gone through, so it'll be easier for us to sort of troubleshoot or find out about the pair that we're trading at this moment of time. Okay, now we're looking at AUD NZD. AUD NZD is looking into perhaps some more room to the downside, like a Z-like type pattern here, as you can see, but it's finding a bit of support at this moment of time, hence it's not really pointing downwards or moving downwards as much as we expect it to at this stage. Okay. All right, I think that's basically it that I've got for you guys. It's not really excuse me, clear sort of pattern from what's been shared with you in the GTI Telegram group. Definitely there's some that are progressing really well from the time that we have actually shared that one, or Arif have actually shared that one. So that's basically it. So any questions at all, guys? No questions from you guys? No anything? Someone who wants to start off with some questions on the ones that you guys are trading at this moment of time, so we can then look into it. Because tomorrow is Friday, probably when you want to close the weekend with some pips before tomorrow or by tomorrow. So yeah, let's share with the rest of the guys in the group as well. You guys any questions at all? You guys can hear me, I guess, yeah? So no sound problems anymore. So any questions, anything at all you guys want to ask on your trades? Perhaps Mr. Kunan wants to start off the group here with some questions, or Marina perhaps. Anyone? Okay, let's see. No question at all, Sasi. Okay, that's good. Yes. All right, Mr. Kunan. Yes. No question, Mr. Kunan, or you have got a question? Perhaps some of the guys here are quite shy to ask, so maybe you want to help them. Brilliant, good. Yes, which pair would that be for, Mr. Kunan, or anything? Yeah. All right, yes, a good one. Okay, let's look into that for Friday closing. Brilliant. Okay, let's look into EJ for Friday closing. That's a very good one to consider. Let's do that. Okay, so here, for example, we have, it's only best to look into clearing all this first. Okay, we'll start from fresh. I think this one here we've also shared on the potential of a Z-like pattern for Friday closing. Let me just draw that one out first of what I see potentially happening. So you've got a A to B, and then you've got a bit of a Z-like pattern here. We are just waiting for that reversal to happen, so it would then mirror and come up to a level of at least 50%. Okay, that's what we were looking at. But let's just start off and see whether or not it's actually a nice or a high probable Z-like pattern. If I take that length there, let's see, all the way down, I can see that we've got still another room of a bit of a price fall at 261.8. Okay, right there. Okay, if at all the bears or the bearishness is actually dominating. Okay, so we can see that there's a bit of room there, 116 to 115.50 area. So let's say if you mark the 115.50 area as a potential rebound or reversal area, okay, because that's the maximum 261.8 area for the Z-like pattern. Okay, so but before that, just to make sure what exactly is going on with the trend side of things, we can see that the dominance is to downside. Okay, some of you guys may look at the A here, B here, and then the C here. I wouldn't see that as a very nice one to take anyway. Okay, because it's just not a very nice in terms of visually as well. Just too much mess here as well, and the C didn't actually touch any one of the three moving averages, so not a good one to consider. But in terms of trend, it just got steeper and steeper in terms of the downward pressure, okay, and working of the candles as well. So as we go on to the 15 minutes chart, let's say, we could see that you've got that resistance now found at that area there on the 15 minutes chart. There's maybe a potential A, B, and then a C area right there, but we need maybe 1 or 2 more candles coming downwards, okay, to go under this support area would be even better. So once it goes under this support area here, and then moving downwards under the central area, that would give you again some room to the downside. That might then confirm that area that we have marked to be the 2618. Okay, so here it looks like a bit of a potential where, okay, let's pull Fibonacci first. Okay, A to B. Okay, you got that minimum of 38.2. Okay, that's all right. So if we take that ABCD, okay, and move it down there, you can see that it is mirroring where we are expecting it to go down to. So that might tell us that yes, there is this room for it to come downwards. Okay, so if I mark this one here, because it was at 38.2, then the 224 and 2618 would actually be your area to mark based on Fibonacci. Okay, so there you go, giving you another possibility. So you got three lines, three possibilities right there for the room downwards on the Euro JPY. So we are analyzing the 15 minutes chart to see how much room it could go down, because this is based on the bigger pattern at 4-hour chart on the possibility of a Z-like pattern that we have just mentioned. Okay, so okay, there you go. You've got that there. Now, if it were to come downwards, where were the points that it has actually gone up in the past significantly? So that is a very important question. So if it comes downwards, where were the risks in the past? So that's where the risk is. Okay, you've got a big move upwards right there. Okay, so we don't need to go too far, because that visually itself looks like a very big move. So we just want to mark. Now, if you look into this one here, you see that prices have actually appreciated exactly on that body there all the way up, and that is quite a big move up. Okay, so you can also mark this one here as the candle here, not necessary, but this one here gives you that hint that this is where prices actually went up by. Okay, so if at all you have a room for a downside, that's your red line there. Okay, that's the red line there. If not, then you've got more room to the upside. So I would say, in summary, Euro JPY is very close to a reversal because you just got too much power of the buy side there. But if you want to analyze further, look into how it's moving at this stage. Look at how the candles on the downside, or the bearish candles, are also weakening. Okay, you can see that happening already. So you just want to wait and look into price action. 116.00 is your closest psychological level. Okay, so prices need to go above 116.10 and above, even 116.30, to show that upward momentum. If not, if it goes under 116.00 and under all these three lines, or in between, and then looking at it's going to go downward, then only then you would consider more downward move. But at this stage, I'm more biased to the upside, but a little bit of room maybe, but let's wait till prices tell us what it's planning to do. So 116.10 or 116.30 and above, it will give you more room to the upside. Okay, so here, if I consider that as my Z-like pattern, then this is how it looks like. Okay, so if let's say it's consider it to come down on that area, then you are looking at, this is only at 38.2, not at 50, so it may have room to go to that level upwards or that level. Okay, this is where we would need for prices to find. I mean, if it start reversing sooner, then it's closer to that 50% area. So this is where we just don't really know as yet where would it like to rebound or reverse from, but this is your potential Z-like pattern that I have actually drawn right there. Okay, so a bit more room until where we don't know, and then would actually go upwards like that and find reversal somewhere there to come downwards. Okay, so that's the expected move, but now it's just simply too soon, too little room for the downward type trend in my opinion. It's probably best for us to ride the upward type move when it starts. Okay, so which may actually end up to be quite a nice Z-like pattern, but we don't actually know that as yet until it reverses. Okay, hope that is clear, Mr. Kunan, on the, this has actually been shared, I think, and it's still the same progress for the Euro JPY. So it's actually progressing very nicely to the downside. This is the same level we are expecting for it to go. So 115.50, I remember, is an area to look out for because that is very close to where we are expecting the reversal for the Z-like pattern. If it does reverse at that area within the 115.50 area, then you've got a better likelihood to consider that this is a nice Z-like pattern taking place. So this is a good, not too bad one to consider, but we just need prices to show us what it intends to do to make that pattern even more successful. Okay, Mr. Kunan, is that clear? Anybody else got any questions about your type of trade? Okay, no problem. Most welcome, Mr. Kunan. Okay, so that's yeah. Before Friday closing, I would guess. I think it might. It does actually depend on what we're expecting, whether later today or tomorrow in terms of the economic data report. Do we have anything that is pending, either late today or tomorrow on Euro? Okay, because that will then might, if it, at all it's strong enough and it's positive, then you will see that this Z-like pattern would then come through much better. If it's negative, then if it goes past this one far too much, for example, let's say, how would it be a failed pattern? Is when you pull this one here from A to B and it goes past this 261.8 and you see prices going down and down and down and under 115.30, let's say, and then go below it and go way beyond. That means that Z pattern has failed, but you've got more room to the downside. Also means that you've got more bearish type pattern. Okay, but this Z-like pattern, even though it actually bounces off from this area upwards, you still consider that as a bearish Z pattern because it would then find room to come down again. So overall, it's still looking like it's bearish bias for the Euro versus the JPY. Okay. All right. Upside down pattern as well. Yes, let's look into that. Actually, I forgot about that upside down type pattern. Upside down pattern, if at all the upside down pattern works or succeeds, that only shows that you've got loads and loads of room down and down and down again. Okay, so which is still good because you know, it is still looking like the yen is appreciating a lot more. From, you know, appreciating a lot more. Now this one here, this kind of pattern, yes, it can be considered as sort of upside down pattern, but the problem with that is it's got this zigzag, you know, like an ABCD down. So it's not rounded. If it's rounded like this, okay, if it's rounded like this, for example, then your probability of a cup handle pattern would be higher. It has to be rounded at the top. But here it's not really rounded. You see, it's not, the price didn't go around it. Visually itself is not looking like a high probability type pattern. But I give you an example of, I think we've shared this a couple of times for USD JPY. Now USD JPY, for example, let me just okay, maybe not clear it. Give me a second. USD JPY. Okay. Now remember we shared with the team about the there is a huge cup and handle pattern, not the upside down cup handle pattern, but the cup and handle pattern on the weekly chart. But you can only see that once you zoom in. Now, zoom out. Once you zoom out, you can see that it has that jagged right there, but as you do that, it's quite rounded. You know, it's not too crazy. But the good thing about it is that it's got quite a clear sort of handle that got stuck at the 50%, because the handle, when it comes down, it should be about 50% of this big move. So that sort of met the criteria. You see, 50% move. Okay, so this is one of the criteria. So that sort of make it look like this cup handle pattern could actually work. So now this cup and handle pattern is testing again here. So as it comes down, it's meeting the 200 moving average. So again, it's telling us that it might find support at this level and then boom, up again. Once if it does actually go up and then meets the area here, then it would go up. So let's just draw that very nicely. This is not the upside down cup handle pattern, but this is just a cup pattern here. Okay, so you go up like that, yeah, and then down, right? So this is the cup mouth area right there. Okay, this is to tell us that if at all this cup and handle pattern is succeeding, then you've got a lot more room to expect the US dollar versus the yen to go up, you know. So if it does, then it goes like this. Now it's down here obviously, but if it does find its way upwards, then it might go upwards like this, come back down. How much up or down, we don't know that. We need to mirror where you could find significant, you know, support as well, resistance as well. Okay, so then it comes back down to the mouth usually, and then it shoots upwards. That shoot up usually mirrors the same distance between this mouth and the base of the cup. Okay, so this is basically what potentially could happen, but the probability is getting higher and higher for this cup handle pattern to succeed. So we are still looking at the possibility of a huge potential to the upside for the USD JPY. Okay, so but this is on a weekly chart. So while we see that big pattern and it's happening quite well, hence the reason we can find quite clear pattern on lower time frame and trade that in stages for the USD JPY. So that's why big pattern usually confirms the overall picture. Then we find, like we go on to 1 hour chart, let's say, then we see what's going on. We can see that this is coming downwards, but then as we go to the weekly, we know how far down it could actually go to as well, because of the handle, and it's at the 200 moving average as well. Okay, so as we go to the 5-minute chart, we can see. So it's very nice when we have a big pattern as a guide or as a map or a route map, so that we can then trade the smaller patterns and the direction, but keep aware in your mind, knowing that big pattern of whether or not it has failed or not yet. At this stage, the USD JPY looks like quite a, you know, a very strong sort of cup and handle pattern, and it's just, you know, moving towards the direction that we want it to move in accordance to the cup and handle pattern. So USD JPY would potentially be a very nice one to trade as well, because as you see here, even if we go onto the 4-hour chart, you can find more downward type move, but it may have a limit. That's why you got limited there, because on the weekly chart, you know, it's just too close maybe to the 200 moving average, but it may have some more room, of course. Okay, but to check whether or not it has failed the pattern, go back to the weekly chart and see again what has actually happened there. Okay, so it's nice to always confirm and to see. So at least you guys know the route map, the big picture of the USD JPY, and we want to always have that keep us intact, in check on how we are trading it. Okay, all right, Mr. Kunan, thank you very much for that. So not very clear, I would say, Euro JPY, the upside down type pattern, but we can always, look at other patterns I think would be more accurate, or I would say giving you a higher probability type move. Here, for example, you've got a potential W-like pattern as well, which does tell me that there may be a possibility of further downwards. Okay, so you've got A here, B here, C here, D. Then you attach that one there, it becomes a W. So the W itself is giving us some hints that they may be very close to a reversal very soon. So 61.8 is right there. Okay. 61.8 also is around there. Okay. So here, these are areas that might find resistance. So maybe finding resistance again, going up a little bit more, but then on the 30 minutes, it looks like you've got more room to the downside. Okay, guys, I think that's all I've got for you guys. No more questions, I guess. Any more questions? If you guys have got no questions, I shall then wrap it up, and then we'll see you guys on the next week. So it will be cancelled for this Monday. I think this Monday it wouldn't be possible for me to go online. It's a public holiday here, so we'll meet again on Thursday. But I shall confirm with you guys on the GTI group to be able to do it on a Tuesday instead. So I'll have the link if at all Tuesday I'll manage to do it on Tuesday. We'll do it on Tuesday instead of Monday. Okay, for the updates on that. So that's basically it. Okay. Any more questions, guys? No more questions, so I could then wrap it up here. What do you guys say? All okay? Questions at all? Shall I wrap it up here? W line pattern here. I can say that you've got more room for movements, but not just yet. So a lot of pairs, quite a number of pairs are just waiting for it, for more price action and more theme or fundamental type move to help it move. Okay, guys, I think I'll just wrap up here. There are no more questions. So I'd like to thank you guys for today. I will make sure that I do this wrap up properly in terms of closing it properly so that we can then have the recordings for you, okay, by tomorrow. So, okay, that's basically it. Okay, guys, thank you very much. Have a very good evening, and we shall meet again on Tuesday instead. So the Monday's one, we'll cancel it for Monday, have it on Tuesday onwards. But maybe just register once for Tuesday. I'll send out the link on the GTI group, but you don't need to register for the rest of the April ones. Okay? All right. Brilliant. Thank you, Mr. Ganderson. Okay. And everybody else, thank you very much. Sopana Devi, sorry. Okay, so have a good evening, good weekend as well, and we'll see you guys again next week.